What's going on, family? This is not financial advice. Do your own research, man. We're gonna be getting into some charts and we're gonna be getting straight into some numbers, man. So this is a chart that I've been watching over the past few weeks now. This is the big dog, Microsoft. So reason why I'm watching this because it hasn't got beaten down as bad as Apple and Tesla, and I think it's about ready to roll over. So they had a nice drop today. They continue to push down. So I'm thinking if we get a sell off tomorrow, first target for me would be the low. So it'll be around 214 area to 213. And if we break those, we coming down to this zone. We got a nice zone ranging from 205 to 200. That's a nice zone that I got on this chart. That's what I'm looking for. If we continue with the sell off tomorrow, we'll swing puts for this particular play down to the lows and then potentially down to this target down here. So Microsoft has not gotten the huge sell off that the other big dogs have. So we'll kind of check out the S&P and see exactly what I saw today for the price action. All right, so this is what we got for today, man. Wasn't really much. Here we go. I didn't really like the price action today. It was kind of, I want to say, choppy. It's traded down strong with no follow through. It was pretty bad. So you see, we got this big old bearish candle. They closed beneath this midline zone that I got for the range. This is where my range was. So first target for me to be this gap fill to the downside at 3780 area. We'll probably get that tomorrow. I don't know if we'll bounce. We do have some type of higher low situation leading into the next leg down. We never hit this zone down here from 3745 to what is that, 3710 area. We never hit this zone, so I'm expecting this zone to get touched within the next couple weeks. But for the price action today, this is what I saw. So huge sell off. So nice push down. Got a nice retracement. So this is all the price action for the day. Nice push down, as you can see. Got a retracement. And then we got a correction. Then we got this nice little short you could have took. I took the first initial push down. So market open 930 here. This is my first trade of the day. They broke this level. This is my level of 38.19. I had this level drawn on my chart from the previous 2 weeks. This was a major level that I had drawn. Once I seen them break this level, I got the push down. They did retrace, and I did catch another short, but I got stopped out on this trade right here. So those are the trades that I took today. They kind of consolidated. Wasn't really nothing going. I thought they were going lower than this spike up. Kind of flagging play. They double topped and then sold off again. I don't like price action like this. There's no definite range. So I was expecting price to at least push back up to 38, 39, where prices initially opened from. So they never got back up there. They fell off a cliff at the end of the day. So we'll see what happens tomorrow. Got non-farm at 830. So we'll see what the price action does. Whichever way they break, that's the way that they're going for tomorrow. So that could cause the market to finally break out of this chop range. We're just gonna get into some numbers, man. Something that I saw that was interesting to me. So got talks of a recession going. So just gonna kind of get straight to it. a lot of people been asking me what I think about the recession and all this. Am I worried and whatnot? So, the indicators of recession is GDP, the income, manufacturing, wholesale, retail, and employment. Employment is probably the lagging indicator, because everything has already happened. Then the layoffs come. So by that time, we've already been in a recession, and that's when the layoffs are coming. So right now, the cause of a recession. So we're going to get to the causes of it, the real factor. A sudden change in external economic conditions and structural shift can trigger a recession. So as we can see, all that has been going on. The demand of product, the inflation rates, and all that coexists, and it goes hand in hand with each other. So I want to talk about this debt that's really been bothering me. I found this very interesting. So the average U.S. household in the U.S. is carrying $155,622 in debt. That's the average household right now as a nation. That is crazy. In 2022, but in 2022, the debt ratio has increased. So the income has fell by 3% because the overall cost of living has driven up by 7%. So that's not good. So within the next couple years, two years, this is going to be an issue. They have to get this inflation down. So we got the U.S. is in crazy debt. We got the credit card debt out the roof. We got loans. We got mortgages. All these things, man, and it's all the signs are telltale signs of a recession. So the mortgage and student loan debt levels are up year over year. Mortgage debt is now at 8.2%. So that's more than last year, more than 2021. Student loan balances rose about 2.5%. So also the auto loans increased up 6.1%. So all these signs, man, are telltale signs, man. We got to pay attention. The opportunity is coming to invest. And even though these things are happening, we can always hide our money in the things that do well during a recession. So I'm going to be talking about the average person saving. So as of 2022, 42% of Americans have less than $1,000 in savings. Less than 1,000. That is crazy. So it went high over the past 2 years, and now it came all the way down to less than 1,000 in 2 years. That's crazy. The average American's savings account balance is $4,500 in the U.S. So from 59 to 22, the average U.S. savings rate has been at 8.96%. And the total gross personal savings in the U.S. is worth $2.3 trillion right now. So this is wild, man. So a considerable amount, 10% of Americans in the U.S. have zero savings. 58% have less than 5,000 in savings. So this is a crazy stats, man. It's crazy stats. So we got to know where to put our money, and those few sectors that I gave you, man, over the past couple weeks, got to look into those, man. Do your due diligence, do your own research, man, so we can keep this train pumping, man. These are, even though all this is happening, we still got opportunities in the market. So you just got to know where to hide your money. So like, subscribe, man, so we can keep this content pumping, man, and join the Discord so we can learn more about it, man. I'll see you guys tomorrow.